Okay, guys, hope you're well. I'm going to go into the Help Hub. Now, the Help Hub in the Discord is for you guys to help each other. There's another one called Answers Hub where it's kind of ask me. But I always chip in if I'm asked, if I see that I'm tagged into something, and I have been. So I'll flick this over, and it's for Steve. A little salute to you, kid. Quick question. Making my way through the modules. For those of you who don't know, because this video is public, a lot of what I do with Ask Scruff is just for the guys. What Steve's referring to is this. This is exactly how I trade and the reasons why I trade. Now, one thing I want to make pretty clear when I answer this is about the way that I trade. Okay, it's one of the reasons I've come to camera. Make my way through the modules. Apologies for the questions. Never apologize. More the merrier. I'm here every day at the screens, and I'm quite happy to come to camera and just shout, or when we're in our Zoom calls, just ask. It's not a problem. The more questions, the better. There is a lot to take in. Anybody that thinks they're going to learn trading from watching a 15-minute video is nothing short of a moron. If you're going to run a successful business, and certainly if you want to be paid a six-figure salary, it ain't easy. You've got to take it in, and you've got to take the commitment. So you've got to do your research. You want to be a lawyer, you go to university for years. You know, you want to drive a car, you've still got to take an instructor and understand how to drive the car. Trading is the same. It's not easy, guys, because there is a lot to take in. And a lot of the time you don't get it on the first sort of pat. It takes a bit to absorb. All right. So module 27, fib and trigger candle for key entry. Is this a strategy that stands alone against the bias? No. I know it was a random example demonstrated to pull back, blah, blah, blah. Right. Okay. I think what's going on here is, and it's one of the reasons why I want to address this. Most people confuse trading and strategy as the same thing. They're not. A strategy is a framework of how you're going to approach the market and where you're going to enter, etc. Is it the be-all and end-all of trading? Not even close. You've got to put all the elements together. I was asked the other day, what's your strategy? And that's like sort of a little smiler there, a little salute to you. Because somebody asked in his community, what's Scruff's strategy? How does he do it? All this sort of thing. And he didn't know how to describe it. There's no strategy. There's a framework. I read the charts. So I'll come to market, I'll look at multi-time frame analysis, multi-time frame high key levels, entered on a short time frame. In other words, I'm taking a lot of elements and I'm putting them together. It's not a question of X marks the spot. You've got to sort of read it. Now, there's certain conditions in the market. Once you've got your bias in place, you want to be looking at the dominant direction. So what's the dominant direction of the day? Is it long or is it short? Well, if it's long and you want to be patient, you have to wait for your key setups. If you're trying to go both ways, then you have to apply a target criteria. If I'm going against the dominant direction, my target by definition has to be small. If I'm going with it, it can be a bit bigger because I've got the ducks in a row. Now, when it comes to entry point, they're all part and parcel thing. The entry is not the be all and end all. Most people think trading is based on the entry. In fact, I did a poll on the YouTube community about this, and it was right up there. It's not even fucking close. Personally, I think the entry is about 10% of the trade. Maybe it's even less. Most of your trade is the management, and that's why I use madness. Most people think madness is martingale, and because I stage backwards into a trade, they go, oh, no, it's stupid. But actually, if you do any kind of testing, you'll find in a day trade, and I did it the other day for you, you'll find if you go staging forwards, you're actually getting a worse price for less profit. Whereas if you stage backwards, you get a better price for more profit in a short time frame. Oh, thank you very much.
You're welcome.
But that's the one trade that we always have. She trades me coffee for sex. See how she's laughing and smiling straight away. Is that right?
I'll say nothing.
See that? So that was the trigger there. Because you're perfectly Fibonacci formed, aren't you? Very. Anyway, sorry, I'll get back to this. I was kind of off on a track there.
And then you forget what you're talking about.
Well, it's because we're going away for a dirty weekend tomorrow. So that's all right. Well, we're not actually. We're having a Scruffy meet tomorrow, but we're staying over for a couple of days, so I'll turn it into that. Yeah, are you in for that? Good girl. Bring your sex pants. Right, sorry.
No, you forgot.
I have. See the effect that the woman has on me. When it comes to strategy is not X marks the spot. If you are looking for key entry points, it's your levels. Now, the fib and the entry candle, you're looking for those criterias as well. Fib is a level, so it'll be a key entry point. If you're going in the general direction of the market, the dominant, increase your target. If you're going against it, decrease your target. But have an idea of what the market is trying to achieve before going in. You can't just sort of go, well, I want this bit of module and I'm going to just use that. No, doesn't quite work. So a little bit of a ramble, a little bit of a twisted on, because I'm having a moment here in my head.
You just have a clue what you're doing.
Exactly, but there's someone else running around in there. What I'm driving at is trading is a business, and all of the elements have to be put together. You can't just take the bits you like. You know, if you have a restaurant, you might like making the food. You might like seeing the customers enjoy the food, but you don't like doing the dishes. But you've still got to do it, because next day you've got to be prepared to open that restaurant again. And trading's the same. You go through the same processes over and over. Certain parts of it you don't like. A lot of people don't like marking the charts up. I don't mind marking charts up. I enjoy marking charts, because as I'm doing it, I'm reading the market as I'm marking it out, which is part of the strategy. So I'm going to leave it with my description of what my strategy is, and then take it from there. It's multi-time frame analysis, high time frame levels with short time frame entries, based mainly on a momentum push from either a solid or a fib level. That's it. The rest of the strategy is management. So as always, guys, do what you love and the money will follow. See you all in the next one.